Hey, good evening. This is another edition of Crypto Tuesdays. I am Crypto Bilbo. Again, this is not financial advice. I'm not your financial advisor. Just here to give you an update on the crypto market. So let's get right into it. So, crypto ads is set to invade the Super Bowl. So I know everybody's getting excited about the Super Bowl that's coming up. Whether it's your team's in there, if you're not teams in there, whatever, most people are going to be watching it. But one of the things that we need to look forward to is that the crypto guys are pouring tons and tons of money into these crypto ads for this year's Super Bowl. So over the past couple of weeks, crypto has been down. We've been in a down market, but the amount of money that they're spending inside of these for these Super Bowl ads are ridiculous, right? So FTX is an exchange that's spending a bunch of money there, $32 billion exchange. You have crypto.com, Coinbase, Binance, they're all pouring millions of dollars into this Super Bowl. So a lot of people say crypto is crashing, it's doing all these other things, but would these companies be spending so much money in this market or for these markets if they felt like crypto was crashing, right? And then you have, the Super Bowl is being called the Crypto Bowl, as upstart financial firms are spending millions of dollars on TV ads. So it just goes to show you, man, the money is being spent. And I always say, hey, follow the money, follow the money. And then this week we had a huge hack that happened in crypto. Wormhole funds got hacked and lost about $320 million worth of crypto, right? Then they had financial jump in and take care of it and basically make all of the people whose money was sold, they jumped in to make them whole, right? So I say that to say the reason I talk about this is because I want you to understand, like, it's a conversation happening around regulation and how crypto is going to be regulated, and the SEC wanting to step in and regulate it for consumer protection, right? So I want to play this quick video, and then I'll express my thoughts after that.
After several hearings and much talk about regulation from the SEC, crypto platforms and exchanges have been waiting for the government to make its moves and provide more clarity on the rules of engagement. My colleague David Weston spoke with SEC Chair Gary Gensler in an exclusive interview earlier. Take a listen.
We do have a broad agenda, and crypto is part of that agenda, but it's an agenda really to make the capital markets work better for the investing public and for the companies on the other side, to drive more efficiency in these markets. As to your question about crypto, the agency is really just looking out for investors, and many of these tokens, I'm not trying to prejudge anyone, but many of these tokens have the attributes of securities. They're raising money from the public, and the public is anticipating profits based upon the efforts of others. And so we've brought a number of actions. We're trying to work with the various crypto platforms, the exchanges, the lending platforms, to come in, get registered, find where we can to adjust our rule set to get the investor protection for the public.
As you say, you've encouraged the exchanges to come in and get registered. At the same time, a lot of them have not, as far as I can tell. At what point do you have to force them?
Well, no, it's because, look, if you're a platform and you have 75 or 100 or sometimes 5,000 tokens on that platform, probabilities are that a number of them, and maybe many of them, are what's called a security. And it's Congress painted with a broad brush. And it comes down to this: are you raising money from the public, and the public's anticipating profits based on the efforts of others? My predecessor, Chair Clayton, the agency that I'm honored to chair at this point in time, is going to try to pursue investor protection. And if that means bringing greater enforcement actions, we'll do that. But it would be better to have these platforms come in, work with us, and come under the securities laws.
Do you think you've done everything you can under the statutes as they exist now? Do you need legislation in order to really go after and really get registration from those exchanges?
I think that the laws are pretty clear as laid out in the 1930s. And we have an ability to work with these exchanges using various authorities to basically tailor some of these, because these crypto exchanges and lending platforms have operated differently than the traditional New York Stock Exchange. But would it be helpful to work with Congress on some things? I've said this in the past around some details around transfer agents and others. Yes, but unless Congress says otherwise, we have to ensure there's investor protection in this space. And we're going to work with the Commodity Futures Trading Commission, where there's some that are commodity tokens, because while many of these are securities, some may be under their remit, and we work together as two federal agencies.
SEC Chair Gary Gensler there to digest it all. It is time for our cryptocurrency segment with Sonali Basak. Sonali, what do you make of Gensler's remarks?
Yeah,
and the daunting task of figuring out how to regulate crypto?
Well, that's exactly right, this daunting task here. On one hand, from a Wall Street perspective, you have existing financial firms very worried that the SEC is not going to be able to get a handle on the Wild West that's been created out of all of these crypto products. On the other hand, from the crypto perspective, you have them watching very closely, looking at what the SEC is saying is an attribute. An attribute is the word he keeps using of an existing security, so that they can use enforcement actions or add on rules to new products that look like older financial products, Emily. So how the chairman starts to mold those existing rules into this new industry will be of critical importance to how they start to enforce and create new laws.
So I want to talk about, in other news, this $320 million that was stolen from the Wormhole crypto project. It was restored, but in the absence of kind of formal regulation, how is the industry trying to self-correct these big issues?
Yeah, this was so interesting because hacking is something we're not talking about when we talk about regulation necessarily in itself. So the Wormhole project was so interesting because with 120,000 wrapped Ether being taken, we saw Jump Crypto really step in here and make customers whole once again. And you see them finally self-correcting something, and it might be expensive, but it is something that they're able to do themselves.
So one of the biggest things there that I took away from it is, again, you know, regulations. And I think
Alan Lane, CEO of Silvergate Bank. Welcome to BIC.
Sorry. But one of the things that I point out there is that you know, regulations, and they want to regulate it and get these platforms to come in and comply with the SEC. And you said the rules were pretty basic or pretty clear, set out in 1930s. Well, I mean, the truth of the matter is that's almost 100 years ago. So for us to continue to operate on a system that's pretty much outdated and antiquated doesn't make a lot of sense. And then on top of that, you have these decentralized platforms that are doing the same as far as making the consumers whole and consumer protection without the interference of an SEC or any other government body. I do think regulation could be good in some sense, but you know, like I said, a lot of what cryptocurrency is about is the decentralization of these older things. And you know, when you say an attribute of something that happened 30 years ago, that might be true, but we're not in that same space financially. Economically, it's not at the same time. So I think to keep trying to compare crypto to these older things, it really doesn't make a lot of sense. But I know that's what they have the base to draw from, and you have to come from some area of thought. But honestly, if cryptocurrency platforms continue to basically govern themselves in a way that shows consumer protection and a new way of doing business, I think it's going to be really hard for the SEC or the governments around the world to really try to wrap their hands around this crypto and take control of it. But that's just my opinion, you know. But that's where we are right now. But even in that, you know, we look at cryptocurrency and we look at the rate of adoption is still happening. So if you go to this is the Reddit crypto stats, and you look at cryptocurrency, the subscribers to cryptocurrency is continuously to increase. So demand is continues to increase regardless of what the market is doing, up, down, or sideways. More people are getting involved in this space. And then you could also look at the same thing with Bitcoin. Same thing. The adoption, the subscribers, it's on a continuous uptrend. And I think it'll stay that way. Especially when you start to look at inflation, right? So we've talked about inflation before. The more money we print, the less buying power the US dollar has, right? So this is it's called the Big Mac index, or basically what it would cost to buy a Big Mac, right? So if you look at it right now, a Big Mac costs that's $3.59 euros. That's about $4.10 US. And it costs about $5.81 to buy a Big Mac here in the US. And the reason for that is simply inflation. Everything is costing more, right? Everything is costing more. So normally when you have high inflation, people start to tend to gravitate to your more safer commodities like gold, stocks. Crypto is now one. So I think we'll see this trend continue to increase, because the national debt just exceeded $30 trillion for the first time, right? So that's huge, right? One of the good parts to it is that we are seeing more of our GDP raise. So our gross domestic product is raising. So that means we're selling more things. But the fact of the matter is like it's still a huge imbalance of how much we're spending and how much we're making. And again, that's a recipe for disaster when you look at in a economic standpoint. Like that's not going to last for too much longer, right? So it has to correct itself in some way. I've read reports where they said the market is due to correct or drop another 15 to 20% before the Fed will step in and start to buy bonds again. So that's going to be a lot of pain points for a lot of people. I think we'll see a little bit more downturn, even though we did see a correction in Bitcoin. So we can go to the chart and take a look at that. So I know this is a lot to look at right here, but I have a few price points picked out. So, but if we look at right here, we'll go from right here. Where is it at? Right here. So we came back. We had a support level somewhere around 34,000. Right here is where we started to correct and gain some support. So around 36,000 right there. So that was February 3rd. So from February 3rd to February 8th, about 5 days, we had about a $7,000 increase on Bitcoin, and we're holding above 40,000. So that's a psychological point. So that means we're headed in the right direction. Will it hold? I think for the short period of time, I think we will see an uptick. We'll probably get somewhere around 50,000, 52,000. And then I think we might see lower again. But for now, we are in a positive momentum to the upside, but we are sitting at resistance right here. So we'll have to see. So one of the things that I want to discuss tonight is basically because we've seen this downturn in the market, and really, if you go back to May, let me see, go back here, we zoom out on the chart, and we go right here where this downtrend started. So we started around, this is November, no, where are we at? December 2000, January, hold on a second. About right here, November, started that downtrend right there. So let's just say taking from November, right? November to now, we've been in a constant downtrend, and a lot of people who are in crypto, they always buy at these highs, and then they have to endure these long dips, these long trends down, right? It looks like we're turning, but we still, like, if you bought up here, you're still having to endure this. So I think one of the things that we need to learn about is DeFi, decentralized finance, and this is one of the platforms that I want to talk about today. It's called Drip, the Drip Network, right? You're able to earn yield on your money, whether the market is going up, down, or sideways. You're able to earn money in those markets. So most people, they're in a howling situation where they're just holding their buy project and they're hoping to go to the moon. And sometimes most of the times, well, I'll say sometimes that will happen. And it really depends when you get into a project. But over the long term, I believe, if you don't sell, you'll be in a great position as far as just with the adoption of Bitcoin and getting more and more. So, it's just like a stock. You leave it in there 3 to 5 year time horizon, then you should be good. But in the meantime, people who need daily income and need to make a residual on their money, I think DeFi is the answer. So this is one platform that I'm in. I've been in since January 18th. I started with about $750. And the price of the drip token was about $67. It's up to like it hit 169, around 169. It's around 130 now. But what it is, you're earning 1% daily on your deposit. So 1% daily for 365% on your money. So if you just think about a bank, right? Most banks, you're making 0.05% or less per year, right? So this is a platform, and again, this is not financial advice, and you have to be super careful with these type of new platforms and new protocols. So definitely do your research. But this is one that I put my money in, I've done the research, and the protocol makes sense. But you're making 1% daily on your investment, and then you're able to compound. What they call hydrate, you're able to compound daily. So it's a strategy behind it. But platforms like this is the ones that I think that you need to start looking into to try to grow your money while it's sitting there. Even if you're holding cryptocurrency that you believe in, they have other platforms where you can stake your coins. You don't sell them, you just stake them, and then earn interest off the assets that you already own. Because that's one of the things that wealthy people do, right? They don't sell their underlying asset, they leverage them. So they leverage their underlying asset and they make residual, or they make interest off of that underlying asset, and most of them, they live off the interest of their money. And that's the position that I think everybody needs to be in, having your money work for you, right? So this is Drip. You can go to CoinMarketCap and take a look at it. It's rated 3,500 out of 17,000 coins right now. And it's been running for about 9 months now. So pretty solid, pretty consistent. Right now it has a $13.2 million market cap. And like I said, when I got into this about a month ago, well, less than a month ago, it was at $67. So I get the price increase, the increasing of the price, and I get paid interest on the appreciation as well. So it's a solid platform. And then, like I said, right now they have over 60,000 addresses, wallet holders. So the community and the network is building on this particular platform. So it's one that I would take a look at and definitely see if it's something that you want to do. So that is it for Crypto Tuesdays today. If you have any questions, please, we can answer those now. We'll be here every Tuesday, 7 p.m. Central Standard Time. Please like and subscribe. Crypto Bilbo.